Hi, I'm Jesse Baines with Yahoo Finance Canada. Welcome back to another episode of Editor's Edition. Today, we're talking about real estate during COVID 19. And there's a lot to talk about since our last episode, all the way back in November. December, we took some time off for the holidays. Well, governments at the federal and city levels, they made moves to help buyers, get a foot in the door. But home prices, they continue to rip higher time. Philosophy Realty's John Pasalis is here to help us wrap our heads around it all from Toronto. Hey, John, thanks again.
Thanks for having me.
And from all the way across the country, we have Oakland Realty's Steve Saretsky in Vancouver for what is actually, believe it or not, episode 5. Steve.
Always a pleasure. Thanks for having me on.
So today we'll dig into those new measures and other topics like mortgage rates, the condo market, and this so-called urban exodus that we've been hearing about and we've been talking about through our series of episodes of shows that we've been doing. And vaccines are rolling out. So a lot has changed. But let's start in Toronto. Toronto Mayor John Tory, making the case for a vacant homes tax, and that's going ahead back in early December. He said the goal is to make housing more affordable, but, quote, more importantly, he said, it will encourage people not to leave homes vacant. That's the real purpose of the tax, is not to have homes that are sitting vacant at a time when we have a shortage of housing in the city. So basically what he's proposing is 1% of assessed value. He says it's going to raise around $65 million a year. John, what do you make of the timing of this?
I mean, it's probably coming a little bit too late. I mean, Vancouver's had this policy in place for some time, but again, never better late than never. Probably not going to impact affordability too much in terms of the price of condos, but may actually just end up putting more of those units into the rental market, which will at least help affordability of rentals, at least in the short term.
He said he's been wanting to do this since December 2017, and he's talked about the money it'll raise. Does this feel like a bit of a tax grab to you?
I mean, I don't know if it's a tax grab. I mean, I think governments just move very slowly. I think they see what's going on in the resale market. They see what's going on with prices. And again, the concern here is that, what if there are a lot of investors that are just sort of banking these units, holding on to them just as assets, as secure assets for their money? We know it's happening. I mean, anecdotally, we don't know to what extent. And really, they're just trying to curb that type of behavior. They don't want condos or houses to just be, piggy banks for the world's rich. They want them to be for places for people to live. And if you're not going to live in them, at least rent them out. And that's kind of the idea with this policy.
Right. So as you said, John, Vancouver, John Tory's been talking about that, says he's wanted to do this since 2017. But meanwhile, Vancouver has basically been said, hold my beer, watch this. They had one at 1% in 2017, and they tripled it to 3%. When Mayor Kennedy Stewart announced it, he said, quote, by tripling the tax 1% to 3% since the tax launch, we're sending an even stronger message that homes are for people, not for speculation. Steve, what do you make of this 1%? Seem to have done the trick to a degree if you listen to Mayor Kennedy Stewart. What do you make of jumping all the way to 3%?
Yeah, so if you kind of look at the numbers on the tax, I mean, I would definitely say there's no question that the empty homes tax had some of an impact. Like what we see, like even anecdotally, is you saw some people decided to sell. You saw more rental units come onto the market. So, for example, you would see people that would normally leave, like on the west side of Vancouver, in these $3 million homes. They would be completely empty, and instead what they were doing is they're saying, okay, well, I might not live here in Vancouver, but I'll rent out my basement suite to a student for $1,000 a month. That way it's occupied, I don't have to pay this tax. So, it eased up a little bit of the rental market. I mean, I don't think it made like a huge difference. I mean, obviously we still have prices going up here today. But what I can say is, like, if you actually look at the data, the tripling of the tax is in my opinion is more just a political move, because if you look at it, I think like last year, for example, the empty homes tax was only paid by like 500 homes in Vancouver. I think just under 500 homes. So like you're really just tripling a tax that only hit 500 people to begin with. So I just think it's more them trying to sort of squeeze in, and it's more of a political gesture than anything.
Do you think that the foreign buyers have already left Vancouver? to such a degree that this doesn't really make sense? It's sort of like a little too late.
Yeah, I mean, I don't know. My personal opinion is like we're still kind of looking in the rearview mirror. Like, there's no question. Like, I know the industry wanted to downplay it in 2015 and 16, but the reality was is that market was like heavily driven by a lot of offshore investment at the time. And what we've seen since is like that bid has just kind of dissipated since 2017. And yes, I mean, of course, there's always going to be some foreign buying here in Vancouver. It's a global city, but it's really not driven in the last couple of years. It hasn't been driven by that money. It hasn't returned to the scale. And all you have to do is look at the luxury property market in Vancouver. I mean, it's still way off from the highs.
Yeah, it's funny you say that. I mean, I don't know. Just anecdotally, I in 2016, no, sorry, 2016, which is 1996, when I was a 16-year-old. I just gave away my age, but lawns in West Vancouver and the British properties, I guess they're called, for a landscaping company for 2 months. And honestly, I hardly ever saw anybody in those mega mansions. So I don't know if back then foreign buyers were scooping them up and not actually living in them. But anyways, I'll throw that out there. With that probably has no actual significance, but
sounds about right.
Yeah. So the other thing that's happened since we last talked is the federal government stepped in its fiscal update with a first-time home buyers incentive. And here are the details. So when it was first introduced in 2019, the maximum home price to be eligible was 4 times household income, but it's going up to 4.5 times household income. I should say this applies to high-priced markets of Vancouver, Victoria, and Toronto. So it's going up to 4.5 times household income in spring 2021. The buyer's income threshold is being raised from 120,000 to 150,000. So the changes mean the maximum home price for eligible first-time buyers in the 3 markets goes from 505,000 to about 722,000. So let's start in Toronto with John. There wasn't a lot of uptake when this was first announced because it wasn't really enough money considering the high price of homes. So this is a 2-part question. Does this actually help first-time buyers get into the Toronto market? And 2, does this just stoke prices even more?
Yeah, I don't think it's going to help people get into the market. I don't think it's going to stoke prices more. I don't think it's going to have much of an impact in Toronto. Like, I mean, at the max price of 700,000, you're getting a condominium, probably not a house. And we have to keep in mind, I mean, the big plus of this program, or the idea with it, is that you don't have to pay interest on sort of the share, the 5% that the government's putting in. But with rates at 1.6%, like your mortgage payment on that amount is not that much to begin with. So most buyers are going to think, well, why do I want to give up 5% of the equity of my home when I'm saving not really that much money off of my mortgage payment? So I don't see it having much of an impact. And again, I think the main factor is just because rates are so low right now, it doesn't really wouldn't really make sense for a lot of people to do this.
And I don't want to get too political and put you on the spot too much here, John, but do you feel like Ottawa watches when we see prices and activity shoot up month after month after month, and they want to give the impression that they're doing something to help the first-time buyer, even though it might not work? Do you think it's more of a political move to reassure people?
Yeah, I would think so. I mean, when they announced this as part of Trudeau's campaign, I mean, it seemed like it was one of these things that they could do easily to make it look like they're helping first-time buyers. It looked like they didn't want to do things that would inflate prices more, like increase amortization periods and things like that. So it does definitely seem more of like a political program, so they can kind of walk around and say what they're doing for first-time buyers when it's buyers.
And Steve, in Vancouver, you need even more money to get a foot in that market. What's your view? What this means for somebody trying to buy a home in Victoria or Vancouver?
Yeah, I mean, I'm similar views to John. I mean, I don't think it's going to have. I mean, if you look at the program as it was, there wasn't really much uptick to begin with. I think it was designed like that from the get. It was a political ploy, in my opinion, to make it look like you're doing something, like make it look like you're helping, but it was kind of counterintuitive or counterproductive to what CMHC was trying to do. For example, with Evan Siddall was kept trying to discourage people over leveraging into the housing market. And so this was kind of like counter to that, but I think it was kind of designed not to have a whole lot of uptake, to obviously make that program a little bit more realistic in terms of like getting people to actually use it. I think it'll have a little bit more uptake. I mean, I don't think it's necessarily going to like light the market, but I do think at the end of the day, like, these programs, like, it's going to take some time for some adoption, but perhaps over time it puts a bit of a floor under that entry level.
So, Steve, another thing that was part of that announcement during the federal fiscal update was a foreign buyers tax nationally. I mean, Vancouver has its own, but does it make sense for there to be a national foreign buyers tax? Like, I mean, Vancouver compared to, say, PEI, does it make sense? Is it practical? I mean, there wasn't a lot of details, but what's your take on that?
Yeah, I mean, personally, it's obviously a very political conversation, but bit of a hot potato. But in my opinion, I don't think that you need a foreign buyers tax in New Brunswick or Edmonton, Alberta, where I just don't think you have that level of buying. But I think, again, it's more of a political ploy. I mean, could you argue that you need them in Vancouver and Toronto, maybe Montreal? Yeah, I think that's a realistic discussion to debate, and there's certainly been some benefits out of that. I mean, when you have house prices where they are, and you have no desire whatsoever to raise rates, for example, like you kind of have to counter like what monetary policy is doing. I think it makes sense to have foreign buyers taxes, but I don't think that necessarily, like, I mean, again, look at like Alberta's property market. I mean, gosh, it hasn't moved in 8 years? Like, so do they need a foreign buyers tax? Probably not.
Right. So another thing you guys sort of touched on it, mortgage rates. I mean, HSBC stunned with a 0.99% uninsured variable rate mortgage. I never thought that I would see this in my lifetime, but here we are. I mean, it just seems like just yesterday we were talking about a rising rate environment, that rates can only go up from here. What, John, does a rate like that do for this frenzy that we're seeing in the GTA markets?
Yeah, I mean, I think it has two side effects.
Especially considering it's, sorry to cut you off, but it's an uninsured mortgage. So these are people that don't have big down payments necessarily, right?
Yeah, I think, no, it's insured.
Yeah, I would think it's insured.
Pardon me, sorry, insured, but you get my point. Insured, I misspoke. I meant to say insured. You're right, Steve, sorry.
So, I mean, I think it does a couple things. I mean, I think on the one hand, it gets people to spend a lot more. Like in the past, buyers would kind of get pre-approved for a mortgage, and they'd never ever want to go to the max that the banks would pre-approve them for, because they're worried that their payments would be too high, and they're just not going to be able to afford it. Whereas today, with the stress test, everyone's fine, maxing out how much debt that they can take on, because they're not paying 4.85%, they're paying 0.99% or 1.66%. So it really makes people feel comfortable maxing out on debt and getting as much as they can, because the costs to finance it right now are so cheap. I think that's the one thing. The other, thing it does is it really motivates investors to just jump back in the market, because even if you're buying a condo with cap rates that are really low, 2%, if you're only paying 1.5% or 1.3% on your debt, you're still making money off of the difference. You're making money off of your debt. So it's really encouraging investors to jump back into the market, because their cost of funds are really, really low. So I think that's kind of one of the things that we're seeing most recently in Toronto's market, at least.
So, John, the buyers that are stepping in, are they coming in with big down payments? Because low rates are great, but if you don't have the minimum down payment, then you're out of luck, right?
Yeah, so a lot of people are coming in. Of course, you have to have a 20% of down payment, which people have. Most people probably just, refinance their homes and take, $100,000 out of the equity. At the end of the day, prices in the GTA are up at least 15, 20% in some areas. So people have made $100,000 on their home's value probably in the past 9 months. So a lot of people are just refinancing, taking that money out, and just buying a condominium, say, downtown.
Right. Steve, what's the situation like in Vancouver in terms of the down payment people are bringing, and how motivated people are to buy now while rates are this low?
Yeah, I think the down payment, like, the reality is that you basically, you have to have already been on the Vancouver housing ladder. If you're already on the housing ladder, you've obviously made some equity, and that allows you to basically continue trading in the housing market. Otherwise, as a first-time buyer, you're either going through the insured mortgage route, or you're getting help from mom and dad. Like, that's just what it is. And obviously, we can talk about, you know, the societal impacts of that, the wealth inequalities, et cetera, et cetera. Hence why I think we have more and more taxation in the housing market to try to, you know, keep things politically popular. But so, I mean, that's just kind of where we are today. Yeah, people are obviously having to increase their down payments because you have single family houses now in the greater Vancouver area. I mean, like, for a decent house now you're 1.5 million, right? So, I mean, most people aren't going to want to take on, say, $1.3 million in debt. So, you know, they're having to ramp up. Those down payments are getting up to, you know, maybe $500,000, and then you take on $1 million mortgage. Again, certainly a lot of leverage, and I think everybody's knows that, not necessarily knows, but I think everybody has the view that, hey, you know, I'm taking on $1 million of debt at 1.5%. To go up, everybody loses, and the whole thing goes down. So, you know, what are the policymakers going to do? And so, yeah, again, it's going to be interesting.
Yeah. So a couple of key points from that. One is make sure you're nice to your parents, because without them, I wonder if we're going to have a generation of really polite kids to their parents, knowing that with mom and dad, a home, it probably isn't happening in their lifetimes unless they make a lot of money and save well, and rates continue to be low. But speaking of rates, I mean, the Bank of Canada has basically told us 2 to 3 years, expect low rates. Businesses are saying they expect inflation to stay low for that period as well. So few are expecting higher rates anytime soon. It seems like it's rock bottom for the Bank of Canada, but now we're looking at a loonie that we're getting a little bit off of the real estate side of things here, but a loonie that's strengthening. So kind of wonder, and others are starting to, I'm hearing a little bit of chatter that, what about a 10 basis point, like a quote unquote micro cut to the overnight rate? Do you think that's a possibility? And if that happens, then what happens to housing? Steve, starting with you.
I mean, I think that Canada is pretty similar to Australia in terms of their sort of economic and housing picture. You know, high house prices, lots of debt. I mean, Australia is at 10 basis points on their overnight rates. So I think that the Bank of Canada, I still think they're going to go there. I still think that rates are going to have to be controlled through yield curve control. And, you know, there just no level of society can tolerate rising interest rates. So I still think we're going there. I think that, and that's, I think, again, when I talk to my investor clients, obviously they're following these sort of decisions. Their view is that rates, as much as maybe we should want to raise rates to, you know, slow asset price appreciation, the reality is that they view it as the policymakers cannot. They've kind of painted themselves into the corner. And so why don't I go take on a whole bunch of debt, as much debt as I can, take it all in at 1.5%, and then hope to God that the Bank of Canada tries to inflate things away, and you know, you try to lock in that interest rate, right? So I think that's kind of the hope. I mean, again, it's obviously a complicated topic, but we'll see what happens.
Mm-hmm. John, what's your take on a potential micro cut of 10 basis points?
Yeah, I think they've already dropped quite a few hints that they might go that route. I mean, they've said they don't want to go negative, but it sounded like that they've kind of given the hints that they might go a little bit lower. So I probably would not be surprised if they go down to 10 basis points as well.
Yeah, I mean, they've said, Governor Tiff Macklem has said, you know, there's all kinds of risks and reasons not to go negative, but he hasn't completely, you know, said it's impossible. So it's not out of the question, folks. So we've seen 0% rates in Europe, so anything's possible. So let's zoom in on your specific markets here, John. We'll look at the numbers from TREB for December, which were amazingly strong for December. This is the time when people are spending time with their families, which we can't do as much now because of the pandemic, but at least staying home and focusing on other things. But home prices, starting with sales up 64.5%, prices up 11.2%. We talked about pent-up demand, but this is starting to seem like something a lot different. Like, are people just valuing their homes more because this is where they're spending all their time? Like, what is going on, John?
You know, it's really interesting, and it's tough to kind of make that happen all the time because there's definitely like a bit of a herd psychology, I think, sometimes that hits the market. And I think we saw a couple of things happen in December. And the first is we definitely saw a big return in demand and interest from investors, and investors were gravitating to condominiums. And that really drove condo sales up about 75% over last year. And it actually take up a lot of the inventory that was just sitting on. Again, interesting that investors all kind of rushed in at the same time. And on the buying side, I mean, the momentum slowed down a little bit in October and November. You know, that pent-up demand had kind of eased up. And then by December, there's just like, again, this anxiety in the market. There weren't a lot of, options for buyers, and buyers just felt like they needed to buy a home by the end of the year. They're never going to be able to afford one.
FOMO.
Yeah, exactly,
FOMO,
100%.
Right?
And it was just this, again, it's the psychological side of the market that is really tough to quantify, but 100% that was a lot of it. And you had tons of offers on homes, very competitive market, very high prices. And it was just, again, I think this anxiety when people see, and I think the average price growth that you reported it a bit skews the story a little bit because condos were relatively flat. But if you're looking at houses, they're up well in the high double digits. Like in some areas in the suburbs, prices are up over 20% per year, 25% per year, right? So if you're a first-time buyer and you see that, it creates the same type of anxiety we saw years ago in Toronto, where we saw these rapid price appreciations, where you feel like, don't buy it now. In 3 months, it's going to be worth $50,000 more, so I have to buy it now. And I think this is what's starting to happen in the GTA. We're starting to see this on the ground. People are freaking out. They feel like they need to buy, or in 6 months, they're not able to buy the same house that they bid on today because it's going to be worth $100,000 more.
Yeah, and we hear this advice all the time from the older generations who were able to buy these 3,000 square foot homes for like $200,000 or less. And this is what their experience has been, right? Like if you wait, prices, I mean, we've had our dips, of course, after government measures were announced, Vancouver even more so. But there's this view that if you don't buy now, you won't have a chance later. You might get like this tiny sliver of opportunity, but it closes up just like that. And even during a pandemic, here we are. So John, can you just tell us a little bit about like these bidding wars? Like if I see a house, if I go on any of the sites, if I go on your site or if I go on Steve's site and I see a house and it's listed for, $900,000 and it seems like a fair value, am I going to be facing up against multiple bidders? Is this going to be a competition, tooth and nail?
Yeah, almost 100%. And most agents right now are pricing properties low. So they're basically doing that to sort of motivate buyers to come in and have tons of offers. I mean, I tweeted about a property yesterday that got 60, actually, I think in the end it was over 70 offers. So again, this is just a house that was underpriced, a lot of buyers jumping in. I mean, and the reality is, when a house has that many offers, I mean, you really shouldn't be jumping in. I mean, honestly, just to move on. It's not worth competing with 70 people on a house. And I think for a lot of buyers, there's this anxiety, yes, that if I don't buy now, I'm never gonna be able to buy it. The reality is, like for the longest time, house prices were only going up like 6% a year in Toronto. I mean, it's these periods where we see this rapid price growth that creates this anxiety. And hopefully we start to see that cool down in 2021 because it's not a positive trend.
Right. Okay. So Steve, in Vancouver, we saw similar numbers. Taking a look at the December data. December is usually a quiet time of year. So year over year, I mean, it's a little bit skewed, but also there's a pandemic going on. So it doesn't make a ton of sense anyways. But sales up 53.4% compared to last year. Prices up 10.2%. What is your view about what is going on in Vancouver, Steve?
Yeah, I think you can say, okay, December, comparing it to 2019, maybe it was a slower year, like, okay. But if you actually look at December sales, I mean, it was a record month. It was the most sales ever for the month of December that we've ever seen. So, if you focus on the detached housing market, which is clearly the most active segment of the market, it's one thing to talk about sales being up 70% year over year. And you can say, okay, well, what about new listings? The number that I like to focus on is months of inventory. That really just tells me how tight is the market. So if you're looking at detached single-family houses in Greater Vancouver under 2 million, which is basically where the majority of everybody's playing, because anything above that is essentially a luxury market. So the month of inventory for sale under $2 million is 1.6. So there's 1.6 months of inventory for sale below that $2 million threshold. So that's the tightest market that we've ever seen. Outside of the only other month where it's been that tight was March of 2016. And if anyone that remembers March of 2016, that was probably your peak of foreign capital in flight. We had home prices as measured by the home price index. As of March 2016, prices were growing 30% year over year. So that's what happens when inventory gets as tight as it is. You just get this massive, massive face-ripping rally of huge price growth. And even though the MLS benchmark today tells you detached prices are only up 10% year over year, that's a lagging indicator. So you're probably going to see home prices on the detached segment up. In Q1 you'll probably see 15% price growth year over year. And until you get months of inventory higher, it's hard. You're just not going to see a decline in prices. You might see some leveling off out of exhaustion. But we're not there yet.
And I noticed when I was going through the data for from the real estate boards in December that condos that were a concern earlier in the pandemic picked up in December and in Vancouver as well as Toronto. So Steve, is it investors looking for buying opportunities? Is the condo market just decided that there's a vaccine, which by the way isn't rolling out as quickly as it was expected back then? Obviously, Bank of Montreal estimates that it has to be 13 and a half times faster than it is right now to get to that September herd immunity goal. But what's the situation with condos right now, Steve, in Vancouver?
Yeah, so that's another one where you kind of have to peel back the onion a little bit and sort of see what's going on behind the numbers, because you look at sales, condo sales, record highs. So everybody just, normally most people would read a headline and say, well, record condo sales must be a hot market. But you also had record number of new listings. So that is basically offset the number of sales. And so what you actually have, when you look at months of inventory, it's kind of hovering around 4. And so that's kind of keeping the market in balance. So we're actually seeing, again, hasn't necessarily showed up in the MLS benchmark, but you've seen a modest decline in condo prices. Things are balancing out now. The investors are slowly starting to come back to the market. The most obvious shift in the condo market has actually been downtown. That was the hardest hit, most depressed market segment anywhere in the lower mainland here. And that's taken a noticeable turn in the last 6 or 7 weeks. Basically, along with the announcement of the vaccine, it basically got a lot of the investors off the sidelines, and they're starting to get active again in that downtown market. But overall, it's still a balanced market to slightly favoring the buyers still.
Okay, so we've unfortunately almost run out of time here. John, I'm going to put you on the spot. You have 15 seconds to answer this. Toronto, downtown Toronto core condo market, buyer's opportunity, yes or no? Why?
Too early. I'd probably hit pause a little bit. Rental market, I think, is going to stay sluggish.
Great. Okay, so we promise we'll get more into the condo market and this urban exodus next time. We'll be back next month. Thanks so much to John Casalis of Realosophy Realty in Toronto. Thank you, John.
Thanks for having me.
And to Steve Saretsky of Oakwind Realty in Vancouver. Thank you, Steve.
Thanks, Jesse. Appreciate it.
And be sure to follow both John and Steve on Twitter. They offer all kinds of insights into the market's monthly stats. And give me a follow as well. Let me know if there's something that you want us to talk about. If you have any questions for John and Steve, let me know. Also, be sure to check out Yahoo Finance Canada for all your news on real estate, stock markets, oil, retail, Bitcoin, cryptocurrencies. You can check your Bitcoin price and all the news live on Yahoo Finance Canada. See you next time. Bitcoin, cryptocurrencies. You can check your Bitcoin price and all the news live on Yahoo Finance Canada. See you next time.